We are getting Neiman Marcus joining J. Crew in filing for bankruptcy protection. Let's get to Courtney Reagan. Hey, Courtney.
Hi there, Carl. Yeah, so this was pretty expected that filing was going to be coming relatively soon. Neiman Marcus had been on a watch list for a number of months well before the COVID crisis, but they are now officially filing for Chapter 11 bankruptcy, doing so today in a Texas court. The CEO says that before the COVID crisis, they were well on the path to getting back to long-term profitability, but the crisis turned things upside down, in his opinion, at least. Neiman Marcus does plan to eliminate $4 billion of its $5.1 billion in debt. They've secured a $675 million debtor in possession loan here. It does not look like there is a mass store closure program that's going to be undertaken. They do have 43 stores, which of course have been closed. Most of them, at least, are still closed during this crisis, but they plan to reemerge from the bankruptcy in the fall of 2020. Back over to you.
Yeah, Courtney, it's David. I mean, I think it's important to point out for people, and listen, this is an incredibly difficult period for any retailer, but both J. Crew and Neiman Marcus were leveraged buyouts. In fact, if I recall, Neiman Marcus went LBO to LBO. And obviously that does add a great deal of debt and pressure to their balance sheets in an incredibly difficult time.
Exactly. That's a great point. Yes, since 2013, Neiman Marcus has been owned by the private equity group that still owns it. And just like J. Crew, sort of this LBO and really saddled the companies with debt. So it's not as if there were no sales, certainly maybe not the sales levels that they had seen in their previous heyday, but they also had these just massive debt loads that they were just always going to be sort of fighting against. And that had sort of been one of the big crushing factors for many of the retail bankruptcies that we saw actually in the years following the financial crisis. So if they were able to make it through the crisis and then they were bought up by private equity or had some involvement therein, it was just the debt loads that were just almost too big to bear, really, as the retail landscape has changed dramatically.
Yeah, I mean, just to name some names, the owners here were Ares Management and the Canada Pension Plan Investment Board, and before that it was TPG and Warburg Pincus. So clearly a long history there of private equity. I'm wondering about the next steps, Courtney. Is it still out there that they could be a target for a buyout? I mean, Hudson's Bay is always mentioned. That's the parent company of Saks. We talked to the Saks president on Closing Bell last week. I asked him, could he see Saks and Neiman under one roof? He said, absolutely. But I guess the question is for a Hudson's Bay, which is really a commercial real estate company, I mean, they can't be doing well right now. I don't know whether they have the capacity to buy Neiman at this point.
Yeah, exactly. And remember, Hudson's Bay not so long ago got rid of Lord & Taylor, and now that company is sort of facing the same fate here, even though it's owned by Le Tote, which is in itself sort of an interesting ownership structure. But, you know, I guess anything's possible, Sarah. I don't think it looks like a real hot deal landscape right now in retail, so I'm not sure anyone's going to be wanting to swoop in and go after this. The company says they intend to come out of this to restructure, take the opportunity to take down that debt, maybe renegotiate some leases. There are some benefits, certainly, to filing. Perhaps that's what happens, but anything's possible. I just haven't heard a lot of deal talk in the retail space as of late.